Opendoor stock is up 110% today as of this recording. Of course, I'm happy about that. I rated Opendoor stock as a buy back in February when I talked about how undervalued this business was, and I described to you using my proprietary discounted cash flow valuation model how I thought the stock price could reach close to $4 per share. So I'm happy to see that the stock market is realizing the value that I saw in this company way back in February. But do I still think the stock is a buy right now after the price has increased by so much? Or do I think this is a good time to take profits? I'll answer that question in this video. I'll also review the latest developments at the company and what's going on with Opendoor Technologies so you can understand the fundamental business aspects of this stock rather than just look at this exciting stock price movement and try and make a decision just based on the momentum of the stock price.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Opendoor's management team described their business model, saying that they remain relentlessly focused on their mission to reinvent residential real estate in the United States, making it simpler, more convenient, and more customer-centric. And the real estate industry is one industry that I've been talking about for several years as being ripe for innovation. The category in how it executes purchases and sales and refinancings and financings, all of that is very complicated, slow moving, and high fees in this industry. So customers, both buyers and sellers, are very open to new companies offering innovation in this category. So in recent months, the real estate industry in the United States is going into a deeper slowdown. Now, it's not terrible, but it's slow. And one of the reasons the management team highlights is an extremely challenging macroeconomic environment with heightened uncertainty on the back of shifting economic policies and the evolving tariff landscape. Now, I've been talking about how the tariffs that were implemented by President Donald Trump are paralyzing some business activity because business owners don't know what to do because they don't know what the numbers are going to be. They can't make a calculation and then make a decision. The tariffs are changing frequently, going higher, going lower, and rules are being implemented, then taken away. And so businesses are so at odds in terms of what to do. How do they adapt to this situation? How many orders should they make? How much inventory should they purchase? All remains a big question mark. And so businesses are just delaying these decisions as long as they can. They're calling their manufacturing partners overseas and saying, I know we usually make our order right now, but we're going to push that date back for another couple of weeks and then another couple of weeks until we get more information on what the tariff rates are ultimately going to be. So then we can make a decision on what our orders will be because as it is, we don't know. Okay, so that's already happening in businesses making orders for the upcoming seasons. And then now what you're seeing is home buyers and sellers are starting to go through that same kind of paralysis. If you're making a big life decision like selling your home or buying a home, you want to know the economic landscape. You want to know about your income prospects, how they will be impacted by these unprecedented increases in tariffs, right? You want to know if you're still going to have a job. You want to know if your business is still going to be able to sell the same product it was selling, and that was your primary source of income. And now you're not sure if you're going to be able to generate that income anymore. So now you're seeing those implications starting to trickle their way through the economy, right? After the initial announcements of tariffs, you saw a big decline in the stock market. But ever since then, stock market prices have recovered and reached record highs. But that doesn't change the fact that underlying those changes in economic policy, you started to see the negative implications on people's incomes and people's careers and people's businesses, because now they're facing these increase in uncertainties, these increase in costs, and so they're having to pull back on their usual activity, delaying decisions, extending them, pushing them out. And I've been talking about how this is going to get worse as the year progresses, because it takes time for these policies to work their way through the system. And you're starting to see it step by step working its way through the system and worsening the economic prospects of individuals and companies worldwide, not just in the US. Longer term, the policies remain uncertain, or whether it will or it won't increase manufacturing jobs in the United States and make the United States more competitive in trading. But in the near term, I can see the implications already as causing a decline in economic activity, a decline in incomes, a decline in business income, and an increase in consumer prices. Home sellers and buyers are taking a pause. Delistings are up over 30% as sellers continue to exit the market, right? And that makes sense from a seller's perspective. You were intending on selling your home, and then you have this major new policy that is going into effect, and you don't know how it's going to impact your life. You don't know how it's going to impact your business, and you don't want to make a major life decision like selling your home when you still don't know the implications of this unprecedented policy change. So people are just taking a step back and pausing and delaying decisions, not taking action. And when people are not taking action, that's bad news for Opendoor Technologies. That being said, the management has taken great steps to focus on profitability. Over the past decade, they've built a trusted, category defining platform that gives sellers the certainty of a cash offer. So, if you want to sell your home, but you don't want to go through that whole home selling process and you just want to sell your home for a cash offer, Opendoor will give you that cash offer and save you the stress of, how much do I list my home for? Uh, do I have open houses every weekend? Do I let people come into my home every day and disrupt my daily family life in the hopes of getting a few thousand extra dollars selling my home? Or do I just sell it to Opendoor and, take a lower price? Sure, but then it saves me a lot of hassle and it gives me a lot of certainty, it gives me a lot of convenience. And that's where Opendoor aims to step in. Of course, competitors have tried this and it didn't work out, and they bowed out of the industry. A company like Zillow tried doing this, giving cash offers and then reselling the inventory. That didn't work well for Zillow. It was a big disaster and they ended up going out of the market. So now Opendoor Technologies is one of the only companies at this large scale trying this strategy. So now they're evolving into a platform where every seller can explore all their selling options, whether that's through a cash offer or listing with an agent. And this last part is a asset light strategy for the company to generate revenue without having to own the home, without having to purchase the home and take on that inventory risk, take on the risk of maybe they buy the home for $500,000 and then they're not able to sell it for over $500,000. But with the referrals to listing agents, they get a guaranteed revenue source with an asset light uh, generating potential. And that improves the business's capability to generate growth without having to put out so much capital at risk. So let me share with you my proprietary discounted cash flow valuation model, which first identified Opendoor Technology stock as being something significantly undervalued. Back in February, I calculated the intrinsic value per share to be close to $4 at $3.68. The current market price, after jumping 111% today, is $4.89. Of course, if you were following my channel back in February, I had the stock rated as a buy, and I told all of my viewers and all of my channel members that I thought this stock was an undervalued stock to buy. Well, now that it's up significantly, what do I think? I think now is a good time to take profits. I would not be buying this stock at these new higher valuations. Even though the management team has done great in right sizing the business, I think they've taken a prudent strategy in cutting costs in this uncertain macroeconomic environment. But the stock price has soared by so much ahead of the company's improvements in profitability that's coming very soon. So I think if you had purchased this stock back in February when I first recommended it, I think it's a great time to take profits. Or if you just want to keep holding, I think that's okay also. I'm rating the stock as a hold, which means if you already own it, I don't think it's a bad idea to keep holding it. I think it'll perform along the lines with the market on a risk adjusted basis, meaning that this is now a very high risk stock because of the volatility in the share price movements. And so I think risk adjusted, you'll earn a reasonable return at these levels, but I wouldn't be buying, I wouldn't be entering at these levels. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.